FazeClan went from being the blueprint of internet success to going public to watching its stock collapse into Nasdaq trouble. And now creators are walking out in droves. This is a company that went from an almost billion-dollar valuation to being worth pennies on the dollar. Later on in the video, I'll show you how much it sold for 1 year after that billion-dollar valuation. I mean, somehow the face of the brand went from FazeBanks to Phase bankrupt.
I have put myself in millions and millions and millions of dollars in debt. I have never made not one singular dollar outside of my salary via FaZe. Not selling it, not buying it, raising money. I've just put myself further and further in debt. Yeah, I think FaZe to acquire and all the costs for these guys' careers over the last 2 years, I think ballpark 40 million bucks.
But here's the part nobody talks about enough. FaZe didn't go public the normal way. They used an unorthodox shortcut to Wall Street. And that decision quietly started the countdown on everything you're about to see. What shocked everyone wasn't that people left, it's how they left. No buildup, no warning, just gone. By the end of this video, you'll know what actually broke: the business model, the brand, or the culture. If you like breakdowns of internet empires rising and falling, or even just videos of high car payments and bad financial decisions, subscribe, because 98% of you are not subscribed. And make sure you like the video, because FazeClan isn't just another creator group. This was the model that everyone copied. A lot of creator orgs that exist today exist because of FaZe, and this is exactly why this collapse matters more than people think. So FaZe started in the early 2010s as like a Call of Duty trick shot clan. You know, this was like peak Call of Duty, pure YouTube era internet culture. Modern Warfare, Black Ops, Modern Warfare 2, Black Ops 2. That was like, to me, that was the golden era of Call of Duty. And FaZe was one of the organizations that really took the internet by storm. They weren't just good at games, they were good at just being online. They figured out 3 things early. Personalities matter more than teams. YouTube distribution beats traditional esports, and lifestyle sells better than stats. FaZe wasn't just like an organization, they were an identity and a brand. They had houses, vlogs, collabs. They turned gaming into celebrity culture. And for a while, it worked perfectly. But eventually they turned that culture into a corporation. In July 2022, FazeClan went public, but not through a traditional IPO. They used something called a SPAC. A SPAC is a special purpose acquisition company. It's basically a shell company that already trades on the stock market with no real business. Its only job is to merge with a private company and instantly take it public. Think of it like a backdoor to Wall Street. Instead of years of scrutiny, audits, and roadshows, the SPAC lets you skip the line. And during 2020 and 2021, SPACs exploded because money was cheap and optimism was high. A lot of companies went public early because they could, not because they should. I actually remember when FaZe went public, which is why this kind of drew my attention to this story, because I remember when they went public and I would not touch that stock with a 10-foot pole. And I'm glad I didn't, because later you'll see what happened to the stock. I mean, a lot of these companies collapsed and went bankrupt in 2022 just when the market downturned. They just couldn't survive. They went too fast into the market and they just couldn't hang. But for FaZe at the time, this looked perfect. There was no waiting, no traditional gatekeepers, instant public company status. But there's a trade-off that nobody focuses on. SPACs often take companies public before they're structurally ready, and once you're public, there's no undo button. Now, FaZe wasn't being judged on culture, they were being judged on revenue consistency, margins, forecasts, quarterly performance, and creator businesses are inherently unstable. Creators leave, trends shift, audiences move on. Now, it wasn't the SPAC that necessarily caused FaZe all these problems. It really exposed them early and magnified all their weaknesses. After going public, the stock actually popped up, which is what really happened a lot of the time during IPOs and SPAC IPOs, especially back in the day. It would have this crazy run up on IPO and then slowly fall. I mean, that's kind of what these SPAC IPOs were designed to do. It was like early excitement, big headlines, like retail investors piling in thinking they're going to get rich. But the thing is, once the hype fades and you're forced to show your numbers, the market starts asking, uncomfortable questions. What exactly is FaZe's recurring revenue? How predictable is creator retention? How do you forecast a business built on internet personalities? And those questions went unanswered. The stock didn't just drift down, it really collapsed. I think at the time too, they may have been just burning cash hand over fist, and their stock lost over 95% of its value, falling from its highs of nearly $25 a share to under $1. And once a stock stays under $1 for too long, the market steps in. It's not all fun and games anymore. It's really about compliance now. The exchange is basically saying, fix this or you don't belong here. And that pressure really changes everything internally. Instead of investing in long-term brand building, FaZe had to focus on cash burn, optics, and survival. FaZe stopped managing the brand and it started managing the crisis that laid underneath. Once that stock narrative turns negative, it really kind of feeds on itself. And by late 2023, the stock had fallen off a cliff and the inevitable headline dropped. FazeClan was being acquired by another company called GameSquare. Reported valuation, you ask? Around $17 million. So we go from a company a year ago valued at $1 billion being sold for $17 million. And this is a disaster, not just for investors, but the creators themselves who are on this bandwagon. The market was saying, we're not valuing what FaZe was, we're valuing what it can realistically be from here. By March 2024, the deal closed and FaZe's stock stopped trading entirely. The ticker disappearing matters more than people realize. Once you leave public markets, transparency drops, decision-making consolidates, and the power kind of shifts towards the new ownership. They come in and clean house. It seemed like the new owners were just trying to stabilize what was going on and get a handle on the burning cash and just basically reorg the business. We fast forward to very recently and suddenly multiple major creators just announced that they're leaving FaZe. Not just one and not over months and months, all at once. I mean, behind the scenes, contracts were being renegotiated under new ownership, and that's always the most fragile moment in organizations like these. You know, they had valid questions like, do I still own my audience or am I just content for someone else? I don't follow a lot of these creators really. I just thought it was interesting because I remember when FaZe IPO'd back in 2022, but a lot of these creators were just coming out and saying what was going on. Now, FaZe didn't fail because gaming died. It didn't fail because the creators fell off. It failed because a cultural brand used this fast track SPAC to go public before it was really structurally ready. Public markets demanded predictability from an unpredictable business. You know, they were playing with the big boys. They were swimming with the big sharks now. And once the ownership shifts and they're trying to clean house, creators don't want to stay. So here's the real question. Do you think the SPAC is what killed FaZe? Was it like the first domino or the first mistake? Or did it just expose cracks early on? Now, I hope these creators who went off on their own do well and find their own footing. But I thought I'd just throw my 2 cents in on what happened with this because I remember when it went public. I remember the fall. And with all this stuff coming out now, I thought I'd make a video about it. Now, if you made it in the video this far, subscribe because I have another video coming out very soon where I took Caleb Hammer's financial audit and created the Infinity Stones from the Avengers and attached each stone to a bad financial decision that we see over and over on his show. I thought that one was super fun, so subscribe to check that out when it comes out. And as always, have a good day.